So now, in order to build the model, we'll discuss the model in terms of a diagram. There are some preconditions that are required to for a big push, and so we have a traditional economy with and not with no modern production at the start. So the economy does not have skilled labor. Economy does not have variety of goods. So a potential producer starts in the modern sector, starts the modern production with the fixed cost F. The fixed cost we already discussed is the staff that are needed for the business to work. So and now he will the traditional worker will come into the market and start the modern production of goods. He will train the labor so that they are more productive than the traditional labor, so that the returns they produce better quality goods, and he will be able to sell it in the market. And assuming that the market prices are of the traditional good and the modern good are same, so we will build, and now that modern sector person will evaluate what will be the wage rate that he will be paying the labor which are trained by him. Since the labor are already trained now, so wages will be higher than the traditional labor. So the first question that comes, that he will evaluate the potential wages, and based upon that the equilibrium will be discussed, that if there is a profit or a loss. So in the next diagram I will open up the slide share, so you can see this slide share here. So the assumptions of this model is that the assumption as a model is that traditional sector is linear. Linear means that 1 unit of labor is equal to 1 unit of output. 2 unit of labor means 2 unit of output. So the supply curve of the traditional sector is the linear. So if we look at the diagram, so we can see that the supply curve of the traditional sector is linear. Linear means that 1 unit of labor is equal to same amount of output. So in that economy, the the model supply curve is positively sloped, and it has 45 degree. For it requires F unit of labor for the modern sector to start. It's linear, and it is also linear. So the modern supply curve will start from F, and these are the fixed amount of labor that are required to manage that modern business. And this supply curve has a bigger slope because the labor are more productive in that business, and more productive in that business. So the angle is steep, so it means less number of labor can produce the same amount of output, or it means that the same number of people in labor same number of labor in modern sector is more productive, can produce more as compared to the labor in the traditional sector. So the slope is, the higher slope is representing that thing. So assuming that price is 1 and revenue is Q, so revenue formula is P into Q. Assuming that the price is 1, we summarize, normalize it to 1, so the revenue of the firm is Q. So in the traditional sector, the wage line is same as the production line. We already discussed it. They are producing 1 unit per 1 unit time, and their wage is one currency unit per unit time. So this production function line is also the wage line for the traditional sector. So this line is the supply curve and also a wage determination curve. So we can write it as, if I use a pen, and I will write it as, it's W naught, the wages of the traditional labor. So wage now W naught is equal to 1. So we already know it. So with the supply is 1 unit, productivity is 1 unit, and wage is also 1 unit. So they are same. So this is and we already know the modern sector productivity is more than one. So the supply line of the modern sector is more than one. So now we go as now we look at the point A. So suppose they are producing this much. So A gives a point where modern firm producers give all others are traditional. So this is the point where modern firm is supplying. So at this point, you can see the number of labor used by the modern sector is less than the traditional sector, but the total output, total revenue is same. It means the since the labor is productive, so they are able to produce. They are able to uh, use less number of labor time or labor resource to meet the target. So this Q1 is the revenue at point A. So now next point is, so now since the labor in that modern sector would have higher wages, now we need to look at the W1 line. What will be the W1 line? That will be the higher wages of the modern workers. So if you assume that W1 line is below A, the red dot. So if the W1 line is below A, it means that this is the revenue and this is the cost. So that extra portion that is in between is the profit. So it means if the modern sector comes in and it produces item and that revenue that they are getting is Q1, so it means that and the wages W1 are lower than that dot. It means the company's total cost is this total cost, and the Q1 is the total revenue. Since the total cost is lower than the revenue, it means they are earning profit. So so this will motivate the worker to produce this entrepreneur to produce, because at current situation he is earning profit. And if he sustains it, so what will happen, since the wages have increased, so the economy will move towards the point B, because the increased income, increased wages will create increased income, and economy will expand. So the Q1 to Q2. So since he was earning profit at A, in short run now he is getting higher profit at B, because assuming that he is monopolist, so he is earning profit at B. So this is the first situation, that if in first stage he is earning profit, but the situation can be different. Suppose that in initial stage the wages were not W1, they were W2. So what will happen if the wages were W2? It means when he entered into the business, his revenue was Q1, but the cost was this much. So it means he was earning a loss in short run. So now he has to estimate that does this short run loss is smaller than the long run profit. So he compares this red line with this Q1, this is a loss, and this red line with Q2, this is profit. So since in long run he is earning more profit, he would say that I should stay there and I enjoy the profit, so that when enjoy the long run profit. So it means that if the wages are W2, it means there's a dilemma in short run, that they might face a loss, and but in long run they might end up with profit, because the region Q2 and this red line is bigger. It looks bigger.
Sorry, question, sir.
So it means that W2 will create a dilemma, and now they have to calculate if the short run losses are smaller than the long run profit. So if the long run profit are high, they might assume that we should enter, and in long run we will get more than the loss today. So it might be suitable for us to try and continue with the loss. But the problem is, let me erase it. So the problem is that but the problem is that if he enters here, industrialization will occur. But the problem is if the wages are not W2, they are actually W3, which is way beyond B. So it means that the firm is actually losing in short run as well as in long run. So at that case, that firm will never come because they don't see any potential profit coming in the long run horizon, let alone in the short run. So they will say, okay, we would rather we will rather stay out of the market because this market does not have a potential to sustain us because there is not enough demand or the prices are too low to generate enough profit to counter the W3 cost. That this may be because the entrepreneur that came requires very high training and the training cost is too high, or the wages that are required to pay so that the labor do not leave the business after training is too high. So for example, a person goes in a rural area and teaches them some advanced skills, and that skills are also needed abroad. So if he teaches them and that does not give them high wages, they apply for visa and go abroad. So if he wants them to stay into his business, he have to give them W3 wage so that they can stay. So the labor demand, labor supply equilibrium gives them answer of W3. But the W3 is above the long run demand. So it means if he stays into the business, if the seller stays into the business, he might earn revenue in very long run when the economy shifts to the point C. But the problem is we don't know it will happen or not because it's a very long run. And it means that the business might need a very huge investment so that they can tolerate a long run, they can tolerate the loss. Okay, so this was the point. Let me rub it and let's see what's next. So let me end the slideshow. Right. So what it says there that so how we can motivate this entrepreneur to come into the business, where we can see that there are three scenarios. First scenario was the short run profit, second scenario was the long run profit, and third scenario was long profit and maybe very long run. So what are how we can make it possible? So it is necessary to solve the coordination failure in the industrialization, so that industrialization is initiated in the private sector. Because industrialization requires firms to face temporary loss at the start, they are reluctant. They are to enter. So it means if we assume that private sector will industrialize themselves, even it will not happen. So if modernization to be started, we need workers in the modern sector by initiating urbanization. So we need to move some labor to that industrial area. If the industry is in the urban area, so we need to initialize urbanization so that the skilled workers are bunched together in that urban area. And secondly, if the infrastructure is developed, it might reduce the fixed cost faced by the modern firms. So it means another thing is that if the country wants that the industries should come and develop, then country should make industrial zones, special economic zones like in CPEC, so that the provision of infrastructure utilities are already available there, so that they can just go there and bother about the training cost, and the infrastructure cost is minimal. So this will help them to ease their decision. It means if this is there, it means the W123 will be little lower because the cost of infrastructure is not there. The pressure of fixed cost is not there. It means that F is smaller. Okay, so the modern firm might not train the labor, in fear that they will move away. So this is another scare, that if the, for example, if Mercedes company comes to Pakistan and they start training of the existing labor and they start production in the Pakistan, they will be scared that if we transfer the skills to the labor, they will move towards the existing companies like Honda, Suzuki, and Toyota, and that they will transfer our best practices and our knowledge. It will create, it will bridge the gap between the competition. It will bridge the gap between the knowledge and it will create competition. So they don't want to train the labor because they might move away whenever they have got good offers. So for example, for that we need to institutes, government institutes that can subsidize the training process. The example is the Institute of TAFTA in Pakistan. Okay. So the TAFTA Institute can help the industries to, 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 to reduce the cost of training. And second, in the government sector, they have small finance. So then why not government does it themselves? From the government side, their budget is very small. If they are looking to create multiple industries, they don't have enough resources to do them simultaneously. So they need help from the private sector so that their cost is reduced. So now what is big push? So big push is, so if the government help the industrialization process using a big push, it can solve the initial problem of coordination failure. So it means if the government finds out that a typical industry is willing to come, but they don't have the resources to finance the investments, initial investments. So what will happen, that they will not come. So government can help them by creating special economic zones. They can create tax-free zones so that the initial costs are minimized, and they provide the infrastructure over there or training institutes over there. Hence, if and then on the other side, if government invest heavily in one sector, it will surely expand and mature. So it means government should focus on one sector at one time and becoming a channel for relevant sectors to grow. So it means the idea of linkages can be inserted here, that government should pick one sector and do a big push, so that if that in the sector grows, the all the relevant linkages will also grow as per the linkage theory. For example, construction sector is known to be linked with 120 different industries, just like the announcement of Imran Khan yesterday that I will give a big push to construction sector, so that we can avoid the financial crisis that is looming on us and the economic downfall after the coronavirus. So he is talking to help the construction sector, that will create jobs in the construction sector, and it is linked with 120 industries. So it means if that construction sector is alive, then other 120 sectors will get some air, some oxygen, so that they can sustain rather than dying out or declaring bankruptcy. But the problem, now we go towards the criticism of this model. The criticism of this big push theory is that it is very difficult to find which sector to finance, because the economy is dynamic and it is changing all the time. So the research is required to find relevant industries that can help us to know which sector to finance. Then there are management issues, the governance issues, and we management issues and governance issues. So we need to help find a way so that we can do not give a backdoor to corruption. And another issue is we need a super entrepreneur. It means that we need a very big company coming from the local side or coming via FDI to Pakistan, a big industry that have experience to evaluate and train and sustain and survive in the difficult environment. If you're saying that a new industry, a new entrepreneur with zero experience do this thing, it's not possible. Lastly, in developing countries, there's asymmetric information. What is meant by asymmetric information? That the available information is not reliable, and maybe the facts and figures are cooked up, and when they start a business they find out that the potential was not there anymore, and the economy, the costs are not correct, and the realized costs are very high. So they realize that the economy, the initial assessment is not working. So this was the idea. Now we are discussing the based upon the current knowledge that how to finance. So the way we can discuss is that this one student pointed out that we can use public private partnership. So what is the logic behind public private partnership? The logic is the private investors are risk averse, and public public investment is secure, and which smoothens the risk. So we need to mix both of them. But the problem is public investment is not well managed and efficient. So we need to mix the two properties. First is the efficiency property of the private sector, and the risk smoothing property of the public sector, so that we can merge together and then create and how to use it. We can make a bond, investment bond, where the funds are gone joined together, and or a private sector uh, enlists himself in stock market. Means they sell some of the shares to the government, and then becomes public private partnership. Third way is, which is now currently under discussion by the government, is to launch Islamic bonds, which is also known as sukuk, which is more stable as compared to conventional bond method, because conventional bond uses cash as the background. Conventional bonds are based upon cash and interest, while sukuk is based on assets and productivity. Means if you buy a sukuk bond, you will end up, if the project is these assets are productive, you will get a reward. But in a bond, if there is high interest rate, you will get a reward. So but high interest rate does not guarantee high productivity. So the Islamic bonds will help to reduce the risk of bankruptcy of a business, because if the entrepreneur fails and he is not able to earn high profit, he does not have to declare him bankruptcy to avoid the interest payments. But in Islamic bonds, if he declares himself bankrupt, he will sell the assets and distribute it evenly to the sukuk holders, so that the losses are minimized. So this way, the how to finance problem can be solved. The next question was that why don't we shift from the labor? Why don't we shift to capital intensive model? The problem with capital intensive is capital is more free to move as compared to labor. So you cannot easily restrict the capital. Secondly, capital owners are more vigilant and risk averse, which means that when they see a sight of a risk or a loss, they will move their capital out of the country. Third is Pakistan is labor abundant, economy. So where capital is expensive and capital markets are immature. So managing capital will be costly and difficult. So we start with utilizing the resource which is cheap and abundant. Secondly, using this model will actually transform the economy from labor abundant economy towards human capital economy. So we will be able to become knowledge economy. Knowledge economy means economy where the abundant resources are actually skilled labor or knowledge. So that is an ultimate outcome, becoming a knowledge economy. So if we use a capital, we will not be able to become a knowledge economy. For becoming a knowledge economy, we need to involve the people and their brains, and we need to make them and give them education, so that will help them to become a human capital and you use the use physical effort rather than use human intellectual effort rather than physical effort. So this way we can based upon the modern discussion, we can counter the criticism of the big push theory. And lastly, last but not least, we need to understand that the recent development of China is because of this linkage theory and the big push theory. So there is a success story. So we should and since they are labor abundant, so they use this model. We can use it.